Okay, so looking at Bitcoin, we can see that we're on a weekly chart right now. And the first thing I like to look out for is these weekly closes. So if you come down onto a weekly time frame or up to a weekly time frame, you'll see that we have these levels here where price or the candles have been closing, and it's nice to mark those out. And as you can see here, this weekly that closed in August gave an exact dollar touch reaction here. So as price was moving up, this was a great short to have, and price found support on this previous weekly here. And as you'll see as we go deeper down, these levels are very much respected. And on the next level, we can see that they are using the same concept. We can see that there is daily closes. So these guys are much better for intraday scalping. And you can see right now that we've got a daily that has literally been created as of yesterday. And it literally has finished on that weekly that was formed. So since we've got a daily there, I think it's worth deleting that weekly out so we don't have too much clutter on the chart. But you can see now the price is fighting with this weekly, and it has front run this previous daily here, and it's formed a fresh daily here. So this one has been traded through, but we could be looking for a potential backtest here, and we could potentially look for a nice short opportunity of this fresh daily here. So there is a nice sort of intraday range that we could be looking for here. We go down onto the smaller time frames, we can see here the price is sort of bouncing around these high time frame closes, and we could be looking for a potential long here or short here. And there is potential we could just range here, of course, because obviously we have seen a nice impulsive move up. Although it may be a short, well, it is a short squeeze. Typically, when you see an impulsive move, you'd expect a range to form. So, what we have seen is a evident change in market structure from this current range here, or break of structure. So you can see here this high has been claimed on a 4-hour time frame, and it did close on a daily time frame as well. So price is attempting to make higher moves. So what can we derive from that? Really, we can say, well, if price is forming a trend and is making higher highs and higher lows, we want to try and catch that higher low because we want to trade with the trend. So clearly the first move we should make, I'll just get rid of these guys so it's a bit nicer. The first move we should make is we should just take a measured move. So we can see, wrong fib, this one, yeah. So we can just see that currently, so that's a 4-hour close. So you can see that we are bouncing around. We front run the 50 fib, and we are bouncing around the 382 at the moment. We did get quite a strong move down, but that's largely due to the fact that we did short squeeze. So you can see, despite the large move up, the volume profile is very thin. So when you get a strong move up that's basically quite low volume, but it's a lot of short closing, you can easily get the same reaction down. So it was an easy move down. But what the more likely thing is, you've probably got a load of people long in this, because look, you're breaking through these resistances, and then you get the silly money and the silly traders longing into this level. And then what happens is these guys just get trapped. And a good way to spot them and spot those trap traders, I won't go into order flow and look into the actual delta of this area, although I will later, but I won't in this moment right now. We can see, using a session profile, volume profile indicator, we can look into yesterday's volume profile. So this was yesterday's volume data, and what this indicator does is it gives you literally every day's worth of data. And you'll notice that the naked point of controls, more often than not, do get tested. Got a couple down here which are of interest to me, and it's, to be honest, it's one of the reasons I think we will break this low, because these guys do tend to be cleaned up, because you get those trap traders. So when you get those market makers looking for moves, they tend to seek out these areas. But back to where we are now, you can see that yesterday we did get that naked point of control from yesterday. So this is our previous point of control from yesterday, but we call it naked because it's not been touched anymore, like it's been left alone. So we could be looking up to this level for a reaction, and market makers may want to get themselves out of maybe some trap longs. So you may see some high positive delta in this area, i.e. more buyers than sellers, and those guys may want to get out break even. So if we are to move up to this area here, it would be looking for a reaction, which would be nice. So what we can also do is quickly take a fib from this level, from high to low, and you can see that this is coming in around the golden pocket area, which is very nice. So this is obviously an area of interest for us. Already we've got this impulse value area high, which we have broken down from, so we would be looking for price to maybe come up to this level where we're interested, and then come back down and then rehold or reject from the value area high, where we can expect a rotation back down to the point of control. I won't go too much into volume profile theory again just now, but that is the concept of this and the context of the move. So if we do go above this value area high and we do hold it, and we only get a small reaction from this naked point of control, which is that one. Yeah. So if we do get a reaction from here, and it's only a small reaction, but we do hold, we could see this break, and it would be a fair move, and it would be a strong move, because we have only hit this 382. But obviously we're traders, and we want the best trades, and we want the best entries and risk reward, etc, etc. So we obviously would be looking more down to these levels for a nicer trade, and we have got another naked point of control here. And because the move was so aggressive on the way up, there is potential to be aggressive on the way down. So right now I'm just watching this sort of little range here between this 50% fib and the daily. There is some thin volume around here, so it is a bit of a tricky one, so you may want to wait for a reaction and a candle close before you make your move. But yeah, just looking for trades around this area. It is a good point to make that we have made that more high time frame break of structure here, and we will be looking for that higher low, but there is, on a lower time frame, as you can see here, there is this sort of break in market structure here. So if we take a break of structure line here, you can see that there is a beginning of a change of character. So although we are breaking up and making this new high, we have broken this internal structure. So that is helpful for our thesis that we could potentially grab a short here and then come back down to grab this larger higher low. So that would help our idea. We could also add some anchor VWAPs on. We've got one here. So these anchor VWAPs are absolutely incredible. So I'm literally taking a VWAP from the high, and what this will do is this will give me a level of resistance. So this is an important level to watch out for, and it does line up with the value area high. So we could potentially front run all this data and go get all this volume and go get it later. It's just a case of wait and see, really. And yeah, you can see that these anchored VWAPs are incredible. So there's another one here pulled from this high, literally against the high like that, and you can see there was resistance, brought it all the way down, and then it wasn't until it was beaten and reclaimed as support that we got the next blast off. So I really do encourage you to go pull these on your charts. They're really, really great. We can get one here and pull it on that low. We can see there's one coming around this daily now, so that gives us a nice bit of confidence to that daily. So we could be looking for this area. So what I'm going to do is set my alerts for this wick down here, so I will be looking down to that, and obviously I'm looking for this sort of premium, this discounted zone here around the value area high of the impulse. I hope that wasn't too quick. Changing local market structure, yeah. We've got these weeklies also. We've got this weekly we're fighting with. We've got some down here. They're not so relevant as much as the dailies are right now. What else have we got? Yeah, so we've got sort of a nice buy zone here. We could be looking for a nice trade. This will be the discounted zone. So there's a potential we can just go get that 50% fib and grab that anchor VWAP and the daily. That would be a nice trade, but it's probably better to wait for the data to come in. And obviously we're coming up to New York Open, so yeah, it's just a wait and see. Set your alert, see what happens, check the reaction. If you get a wick through and we close, then there's a potential to take a trade and have an easy validation above the wick. So you could potentially look for this kind of thing, maybe this is going to be the tricky bit. You're going to have to set your alert and you have to check the reactions in this sort of level, but you would basically be looking for no high time frame closes, like multiple hours or 4 hours closed above this value area high, because you could expect this. So although your invalidation is probably best there, you would get out of that trade if time was spent above your entry, and you could be looking to trade down to these levels and potentially even lower. But in terms of a long, you've got these sort of regions here. But yeah, it's just set your alerts, wait for your reaction, and trade accordingly. And yeah, that's it.